Good morning. Man, this has been fun, huh? This has been fun. Things actually moving. Things actually moving. There's a lot to talk about. A lot of things has happened. The move that we were wanting to see up here, February 1st, happened there. We were looking for the big crash into 388, which is the glitch trade from January here, but we never got it. Never got the blow off. It double bottomed here. This looked like a bottom and then fills the gap perfectly and then rolls over. We thought we would get a bigger rally before we'd get this volatility event. I wanted to see a blow off top, but I guess we just didn't get it. So we're going to have to deal with what this is doing right here. Once this plays out, we should get an all-time high rally. That's the thesis so far. We have to navigate as to what we're looking at and what are the possibilities going forward for this week into next. So far, the CPI came out. I wanted to wait for this because it's such a binary event, and I don't want to make a video for specifically what could happen, especially based off something like this. So the CPI came in 5.5 with 5.5 estimated, and it's clearly coming down a lot. Next month, you could even see a 4 handle if it gets that bad with how much things get pulled back after this crisis here, that everyone freaks out and things start to drop really, really big. We called the yield top perfectly. This top here, okay, the November CPI was the end all be all. It changed everything, and then it breaks the high 4.9, 4.91 by a penny and falls out of the sky. So that this is what we were looking for. It broke the uptrend, it retested it in this long wave and fell out of the sky. This to me is the 10-year is going back down to here, 3%, and filling the 2.9 gap pretty quickly by May. So that's going to crush inflation. But the problem is just because this comes down, does the market go straight up? It will, but it won't be in a straight line yet. So I'm trying to figure out exactly what we're looking for. So it's really, really freaky. If you look at the setup here, it's really stupid how I missed this. How it's a perfect opposite pattern off of the CPI print, which should mean the end of a wave, so to speak. So we bottomed here and we went up and we had super violent up moves, really, really violent up here, these 4 days. And then we sold off, but the VIX didn't move up at all as the market dropped 5%. VIX didn't move up at all, which is very weird. And we explained it in the last video as to why. So it's either pricing in a move for here, or it's pricing in a move where the VIX was at that time to touch it again. And so it could mean either or. So you could either retest the 367 on the SPY, or it can mean that the VIX, which was right here, the market dropped 5% and the VIX didn't even move. Look at that, because it's compressing and it's pricing in a future wave. And look, that's the top. Nicey nice, like literally beautiful. So there's multiple things that it could be doing for that. That's still in play, which is dangerous. Now, if you look at this, it goes up, 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 up. You get the divot and the blow off top. You go, we got to use the SPY futures for this. We'll just clean it up. You go up, up, up. You get the divot and the pop. You go down, down, down. You get the divot and the pop, right? Then you go down to the 0 line. You go up to the 0 line. You get kicked. Right? You go down, go up, go down, blow off to the upside, blow off to the downside. It's an exact wave. And down here, you kept getting big, violent spikes down. The same exact thing as this. It was the exact wave. And usually, this is exactly the opposite of that. This is the exact opposite of that. So if this is starting a wave, this is the ending it. So it would go up and you go down. And so that would be the completion of a wave. And then you get a big fake financial crisis. Like, look at this. Look at this. This is insane. This is literally insane. Stocks dropping 80% in 3 days. It didn't even drop that much in the financial crisis. In like literally 2 days. It's insane. It took like over a month for it. And now they're up 200% off the bottom. 17 to 50, right? So everybody, and you got these glitch trades up pre-market. You also had the explosion here on all the futures early on. Targets for this week, actually, let's talk about this. So we're cleanly moving up, very, very good. This looks like the completion of wave. This is the downtrend, right? We tried to break it, failed. We broke it, and now we're just violently retesting it. This is exactly what we wanted to see. We wanted to see it here, but we didn't get it here. We got it here. 388 glitch trade from January, right there. Blow into it, and now you're exploding off of it. So this looks like a blow-off move rather than a continuation move, because if this continues, this is going to get annihilated. It's going to do one of those again. If it does that and it's going down, it's going to do something like this. And you're going to go down 10, 15, 20%. But way different quality of the movement here. You bottom here. If it's a bullish wave, it goes up, 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 and then you crash into oversold. And if that crash and then you get the oversold print bounces off of it violently, that is one sine wave. Up, down, and you start going up again. So we haven't hit oversold yet, okay? Which still leaves in the door for it. Which I think would happen next week. I think this week will be a weekly doji, right? So we're looking for a volatility event that is the face of the correction coming. That was the whole thesis. It's the face of the correction coming. This is not part of the bullish wave cycle of October. It's not part of it. It's pricing in a future move and something that's both economically and technical, just 5% of what's coming. That's how scary of the shit that I see coming. It's actually insane. It's actually insane what I see coming, right? So this is just a blip. There's just like, there's so much to look at right here. So the weekly MACD here, I want to see this come down. I want to see this touch the zero line next week. See how it touches it right here and it fails violently? When you have an event, when you have like one sine wave of a move, especially in the VIX, you get the drop, the doji, and then the gap down rip, or the lower wick rip. I think we're going to get exactly this candle in reverse. This candle was very, very weird in the way it moved, and I think we're setting up for something like that. So especially in the VIX, on a daily or a weekly basis, you get the spike, the doji effect, and then it gaps up, goes straight down, or you get an upper wick and goes straight down. And the same compression that happened here in November happened here in October. The market dropped from 365 to 350, and the VIX didn't even move at all. At all. It didn't even move up or down. It just stayed there. And again, it's the same type of compression. We had a newsfeed in the VIX on February 17th, and we mentioned it on Twitter. We didn't make a video on it, or we did? I think we did. Explaining how the VIX is going to go to 29 to 39 before mid-April, and it's a guarantee because it's an algo trigger. Boom, got it. Literally, boom, got it. 214, soon as it triggers, breaks the downtrend, you get a blow off bottom to retest the downtrend, and then it goes. Like, gorgeous. So 29 to 39, it can't go over 39, or if it does, it instantly gets rejected by mid-April. And then you also have an algo trigger that happened March 8th. Look at this. March 8th, and then March 9th in 9 a.m. 9 a.m. hour. It happens exactly at the bottom to trigger it. It's amazing, isn't it? Absolutely amazing. So this one is triggering a move May, June, or July up to 35 on the VIX-ish, 35 to 40-ish on the VIX. But that's not for a while. And I think that we're about to break this uptrend on the VIX, and we're going to have an all-time high rally. I think this is a stabilizer move right here, that it's stabilizing up, it's going to break the uptrend, and it's a fake breakdown. And if you ever notice on VIX events, like the financial crisis, the VIX needs to break its uptrend to go up, right? So straight uptrend, fake out, bear trap, whatever, boom. It's the same type of thing, except this wave is gigantic. Uptrend, breaks, boom. And that's what's going to happen. So you're going to break it in April, and this is going to go down to the zero line. So you're looking for like a May, June activation. So this explodes up and then it fails. This goes down, 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 touches it in May, June-ish. And then you get the activation for this algo trigger. That's exactly what you're looking for. The target for this week, there was a lot of put options, bought for 22 on the VIX. And you have a pre-market move here at 22 on the VIX, right there. This, I think, is a bottom for the week, right there, 22.3 or 21.8. Because we're setting up for the binary event of the Fed. It makes sense to end this week as a doji, at a relative doji, because there's just so much fear right now, and that's just the way the waves move, right? So on a weekly basis, you get the spike, the doji, and then the wick and reversal. I think what's going to happen, so what I think is going to happen to create that is the Fed is going to pause, and I've been saying this for a while, and I had no basis for it, and it's just the way it is. Because it always sets up like that, is that the Fed went 25, 50, 75 4 times and went 50, 25. So it's like a perfect rainbow. It's a perfect sine wave of rate hikes. So after doing the perfect rainbow, you need to have either a 50 or a 0. Because you need, it's such an inflectionary moment in time. The probability of it going 25 and just fucking that perfect sine wave up is just so low. It's absolutely so low because of what we're in. Either you go 50 and you ignore what just happened and you say, oh, this was an isolated event, blah, blah, blah. Inflation's still rampant, blah, blah, blah. And the market sells off. And then they pause after that, I would believe. Or they go 0 and they say, okay, the recent events, blah, blah, blah. We really need to, long and variable legs, blah, blah, blah. And the market initially rallies, but then sells off. Initially will rally, but then violently sells off. And that's just the way waves work, is I think the correction coming will be that inflation sticks eventually, and the Fed will have to continue to hike rates. So right now, the basis of the rally is the pause. So they pause, and rally, okay, we're going back, the Fed's going to cut, blah, blah, blah. This is just the stepping stone for it. And then eventually, somewhere down the line, later in the year, the CPI is going to tick up, or some shit's going to happen where CPI ticks up, and everyone's like, oh shit, the Fed needs to keep hiking rates. And so this move is a fractal of that correction. So they say, okay, we're going to pause. So we rally, and then you get that violent stabilizer down to the downside saying, okay, this is what's coming because you fucked up and you paused. And then we rally out because this should be a bear trap. This is what I see. Okay. We have a huge support zone at 372 on the 200 weekly, and it coincides pretty perfectly with this weird effect that happened in November at 368, and we have the 364 glitch trade from last year, which was the bottom for the year. So this, and there's a lot of negative pushback right here, which makes it very possible to get here. So that's what I'm looking for. I'm looking for some sort of doji, some sort of weekly sideways action. I do not think we're going to get through this this week going into the Fed. We're just kind of messing with the 200-day right here. I think Bitcoin, by the way, is insanely bullish. We've been calling that for a while. Gold and silver as well. I think this was a fake financial crisis as expected, because we know the market's going to be going up. So just the way everything is looking, it just looks like that. It just looks like that, with the possibility of it getting down to 364, which is insane, which is actually insane. But tapping this would be a shoulder, a head, a shoulder, and this sets up 70 points from 215, puts you at 475, puts you at all-time highs. And I think we would overextend it. Also, you have the 100-year trend. This is the end-all, be-all. If we touch this green line this year, again, this is a 100-year trend going to the Great Depression. If we touch this line, again, which is exactly what I think we're going to do in the summer, we are going to literally go straight down like the market has never seen in history. In history. In history. If we touch this line, I am literally going to lose sleep. I'm not going to be able to sleep. So yeah, that's the target. That's the target. I don't trust this for 1 second. The Qs, we were literally talking about up here, how we want to see a retest of the weekly middle Bollinger for the Qs right here. And then we got this weird fucking thing. Like, what is this? The gap up, like, this was so weird. It's such a weird coil. It's like it's hitting something, but it needs to get someplace. It's like the Elliott wave theory. It's like it's so bullish, but it needs to get down here. So how do you behave? And it behaves like really fucking choppy and weird. That's exactly what it is. But yeah, this is exactly what I see. I want to see a long wick down and reversal. The memes still look insanely bullish. They look like they're setting up going into the next couple months. AMC tried to break out the other day, went to like 8.5. And it's still waiting for this breakout in the market to start going up. Like everything will come together. So this hit it exactly, the Qs, and exploded off of it down here. Also, the yearly open prices, that's also important. Yeah, it hit it right here. And look at the explosion. Look at that. 15 minute, 1.7%. I do think we're going to revisit that. UVXY, very important. Had a news feed yesterday for the first time since January 10th. This is the thesis. We made the video in February. We're literally right here. We said look for a blow off bottom down to 434. We missed it by 9 cents for a bottom and a gigantic correction. And instead we got the double bounce. We broke the downtrend, it violently retested it, and boom. Like this is what I wanted to see right here. And so you and I literally said in the video, I can't tell if it's going to be a slow grind or if it's going to do that, because there's no way to tell, because there was no give back in the trends. So there's just no way to tell for me anyway. But it looks so nice. Yearly, this was our target here. It was 6.98, 6.78, and also 6.98. was the thing that we saw early on in January. Where are we? Right here, there's a glitch trade, January 3rd, up to 6.98, and almost always they get hit. They almost always get hit, 6.97. Where is it? Right there. And then look where we hit. Look where we hit, right? 6.97, and we got crushed right off of it. And so it's reacting with the yearly move. And so the way UVXY moves is it moves in a very specific type of function. I'm not going to go over it here, but if this explodes above 6.78, it's preparing, it's the market is bearish through and through until it goes back below 6.78. Above 6.78, the market is in Armageddon status. This thing can go so fucking high and the market can go so fucking low. It's just not set up for that, in my opinion, right here. But I think that 6.78 is going to break on the Fed, which is the setup for the move coming. So it's going to blow up and then you're going to get a huge drop all year. And then that move prepares you for the move coming, which is going to be fucking monumental. Fucking monumental. Like at least 100 from right now. So it's going to have to reverse split. If we go lower than here all year, it'll split, but it will go to pre-split at least 100, which is the COVID top in momentum, which is like what, 2,000%, give or take, which would be like over 100,000 in options. Yeah, so that's the line in the sand, so to speak. So it goes up to it, and now it's getting rejected. So now you're looking for support, and I think 22 on the VIX is the support, right? Like this literally hitting 5.5 right here and breaking that low, which is a pre-market move early in the week, and breaking that low is literally bullish. If this is just a stock and it's going up, this is a very bullish pattern. It's just that's all it is, right? And so the market, right? Q's had a glitch trade up here yesterday morning. This is a glitch trade at 4 a.m. when the computers turn on. Okay? Goes up there, 1.1%, retesting the green line here. This is a long-term trend, right? So if it gets up here, This is just hitting support. And you'd want to see the VIX at around 22. And then you'd be retesting this, right? And so I think we're just going to chop, chop, chop. And then you look for more volatility. 24, yeah, 22, 8, 9. Maybe touch this today, bounce, and then have some sort of a blow off top tomorrow or Thursday or something like that. And that would be the top for the week, in my opinion. And then you're looking for a massive, so the Fed day specifically, literally, we're either going up, and this is the bottom, which is possible because we retested the downtrend, right? And we held on a fake financial crisis. Everything is hit. Almost everything is hit. It looks really good, but not perfect. Or we do something like this, chop, 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 and they go 0. They can even go 50, and the same event can happen. It doesn't matter to me. It's the waves always play out. It doesn't matter. I just like to see 0 because then it also creates the effect for the rally. It's what's needed for the rally. So you initially get the spike, and then you get the fucking literal straight down like a rock, like 5% in an hour type of move. Literally 5% in an hour type of move. And then it like gaps up the next day, and that's a gigantic bear trap, something like that. Right, so then think about it, right? So then everybody sells, everybody buys put options, everyone buys protection. This looks like it's free falling to the low, like this is about to gap below and just this is the end of the world type of shit. Yeah, that would be, it would literally be perfect because this move is such an event that you need to have some really high powered move for the bottom here. Was this it? It could have been. It didn't feel like the end all be all, but it felt like it could be. It just didn't feel like the end all be all. That's what I'm saying, and that's why I don't think it is. And a lot of the waves show it. UVXY had the algo trigger literally yesterday. It'll be married to this green line here, 6.32. You'll see that price most likely again. Yeah, so UVXY, yeah, going up to the 0 line. So what I would want to see is it goes up to the 0 line, starts to fail, and then you get the residual kick up. When UVXY goes above the 0 line in the daily, the market is bearish through and through. You're having a correction. When it's below it and oscillates below it, the market's bullish. So last year we had a lot of oscillations above. It's very rare to happen. It doesn't do it often. COVID, and then it just stays below it the whole time. Just kind of peeked its head up. So you're looking for a failure here at the 0 line. It goes up, you get a failure, but then you get one last stabilization. So it goes up, 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 it starts to come down into the Fed, and then one last pop that stabilizes for the future event. And this is how you predict future corrections, future events, because you're looking at a wave and you're looking at what needs to happen for the rally, for the crash later in the year. And that needs to happen. You need to have a stabilization. Is this enough? It could be, but it doesn't matter to me. It matters how it finishes and how this all plays out. So to me, this is good enough, partially, but not completely. Also, the UVXY didn't spike at all as the market dropped 5% in the end of December, which is again another compression effect that we saw, right? There was that. So the market dropped like 5%, and this never went back up higher than where it was because of how low it was on the MACD. So we still have a gap on VIX-M. We still have an alarm here, and we have an alarm up at 33, which is fucking bonkers if that's going to get hit. Okay, so we still had the glitch trade. It hit the glitch trade right here. We talked about this on February 1st, right there, that it's going to retest this area, and we touched it and got cucked right there, like that. Very, very nice. Very, very nice. But there's still a glitch trade there, and there's still a glitch trade up here. So there are possible waves, although right now it looked like the market bottomed. So it's just that one possible extra oomph to the downside that nobody's predicting or nobody sees or nobody's positioned for, that everyone, if you're going to get like a huge rally, you're really going to scare the shit out of people. I just don't think this was enough. I just don't think this was enough. Yeah, I'm sure there's probably other stuff I saw. I can't ever think of all of it, but is what it is. The Qs, you want to see it get down to the 0 line eventually. That's very healthy. Yeah. So GG's. Go look out there. I just think we closed relatively flat. This could be the bottom, and a huge rally, in my opinion, is coming. Huge fucking rally this year once this plays out. And looking for a possible super violent sell-off on the Fed day after whatever they do on the announcement. All right, go look out there. This is the inflection point. If that's the top for the week, that would be the top for the week. If we impulse through it and hold, then this actually could have been the bottom. So it's all based on that. SPY 406 is the inflection point. SPY 406 right there on the gap of the option candle. If it can get above that, 407. If it can get above that and not instantly die, market is ridiculously bullish. Like explosively bullish. It is imminent. It is imminent. We are going to all-time highs. I don't want to hear it. There it is. There's a kickback. There's the kickback. It either gets rejected, goes down to the 0 line, or it does one of these. Or it does one of those. It wants to go lower, but can't. That's what this function is. It wants to go lower, but can't. There was too much. It's like the economics, the money supply, the psychology. It's literally everything. Is that stocks fell like 80, like Nvidia dropped 67%, and the market barely dropped. You can't have more continuation from something like that. Like right here, literally, we're at the same price. Nvidia rallied huge. But if things kept dropping, if this dropped literally another, whatever, 20%, Nvidia was just going to drop 90% without earnings actually collapsing completely. It was just like the taking all the fluff out of all the stocks. It was just, you know, this is just how the wave functions always mirror the what's going on with the fundamentals. And this was just too much of a blow off. And we should unravel this year. So kickoff. So look for it also. Where is it? The 50 monthly. That's the target, 365. So bounced off of it here. This would be a double tap. Now we have bullish momentum. You would touch that. There's just those targets. 200 weekly, 372, 364 glitch trade. So go look out there. I don't think we break above this week, but 395 area, 398. All right, GG's. Good luck. It's gonna be crazy. It's gonna be absolutely nuts. I'm excited. There's a lot of movement coming. I'm just glad the VIX is moving. Things are happening. I'm so sick of this compressed, no continuation wave type of shit. All right. Good luck. Peace out.